Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwago. On the show today, South Africa Investment Summit draws few foreign pledges. Ghana plans to revoke 4 petroleum licenses for lack of development. And Uganda seeks to revamp aging railing network without help from China. Well, let's get the show started now with the markets. And at intraday today, we saw a marginal increase on the overall market index at the Nigerian Stock Exchange. But in South Africa, the reverse was the case as the index treaded waters, down 0.15%. Meanwhile, the EGX 30 in Egypt rose 0.52%. The Nairobi Stock Exchange index, meanwhile, closed positive on Wednesday. And in the Gulf region, mixed sentiments trailed the markets at intraday. In Abu Dhabi, the index was down 0.25%, with telecoms firm Etisalat shedding 0.4%, while Abu Dhabi National Energy Company plunging 5.8%. However, Dubai financial markets gained 0.40% as it reported third-quarter net profit of 30.4 million dirhams, up from 20.9 million a year earlier. Saudi Arabia's stock market rose, buoyed by banking shares and corporate earnings, with its index up 0.81%, while the Qatar index slipped 0.11%, led by a fall of 0.9% in Qatar National Bank. And in Europe, shares touched a 4-year high in the morning after China said the world's 2 largest economies had agreed to cancel additional tariffs imposed in their months-long trade war. Well, market focus is also attuned to corporate earnings, with Siemens, Commerzbank, UniCredit, and of course Lufthansa reporting quarterly earnings. Let's talk to Chelsea now from the Frankfurt Stock Exchange. Hello, Chelsea. Good afternoon. Well, German airline Lufthansa reported a decline in core profits in the third quarter today. What led to that decline?
Lufthansa has really been struggling over the past couple of years with a pretty tough airline market here in Europe. One of the issues weighing on profitability for them has been higher fuel cost. They've also been struggling with pricing. There are so many airlines in Europe now that they've had to cut their prices a lot. So that's really hurt them. At the same time, they did reaffirm their forecast for this year and say their Eurowings subsidiary, which is one of their budget carriers, is actually getting more profitable, and that's helped drive this stock up about 8% today in afternoon trading here in Frankfurt. So I think investors are they're definitely keen to this challenging environment that Lufthansa has cited. They mentioned this again, what a difficult environment it is, but they seem to be investing a lot of energy into cutting costs and becoming more profitable. That could pay off in the next couple of years.
Now, this report, came the same day that Lufthansa cabin crew began a 48-hour strike that led to the cancellation of about 1,300 flights. How much pressure will this add to the company?
It's certainly going to add a lot of financial pressure onto Lufthansa. This is supposed to affect 180,000 customers over the next 2 days. And the union that's staging this strike has said that they could expand the strike for longer or try to hit more airlines with it. So it could get even worse. But in terms of the financial impact, in the past, Lufthansa has estimated that strikes like this can cost them about 10 million euros a day. The financial chief said today after the earnings call that this could actually cost up to 20 million euros a day. So that's a significant impact for a company, as they're already facing other cost pressures. So they did mention in their earnings call a new restructuring plan that could cut about 90 million euros off of their expenses over the next couple years. So I think the profit situation and their cost-cutting efforts are certainly going to be even more in focus now that they do have the strike pressure on their earnings.
Meanwhile, trade is back in focus amid reports that U.S. and China may delay signing a trade deal until December. How is this impacting the markets?
There's been a lot of whiplash in markets over the past couple of days as reports continue to leak out about the trade negotiations between the U.S. and China. There was a report, this report, that the deal may be delayed until December that drove stocks down. But then another report out this morning saying that they've agreed to cancel tariffs on goods as part of this negotiation, which has helped drive stocks back up. So I think for investors, they're getting a little bit of whiplash as these differing reports keep coming out, and I think the narrative is sort of shifting for investors. I've heard a lot of people sort of moving the goalpost for what they expect to be a market-moving event going forward. So I think investors now are starting to think about not so much this phase of negotiations, but what happens after they sign this deal. Because as Trump has said, this is supposed to take several phases to reach a complete deal. So I think investors are starting to look forward a little bit more.
Okay, Chelsea, thank you for updating us on those developments. Enjoy the rest of the day. In the UK, the Nigerian government is showcasing the country's investment opportunities. And of course, my colleague Juliana Olayinka is covering that event and joins us now from the venue for update. Hello, Juliana. So what are the key highlights gathered so far from this event meeting of Nigeria showcasing the country's investment opportunities to the global community in London?
Good afternoon, Chimase. Well, like I'll say, I said to Bosun this morning, I think Britain are really trying to expand on and take advantage of the amazing investment opportunities that are available in Nigeria. We are in the city of London, a very commercial part of London, and the Lord Mayor of London actually opened the ceremony this morning. It's a very private ceremony, very small gathering, to be honest. I expected there to be a lot more individuals, but I think they've been very, very careful about who they're allowing into this quite high net worth, significant pool, and that's really because they want to get business done. Just towards the end of the proceedings, they were showcasing several companies that are looking for hundreds of £millions, and what they said and what I was told, and from what I can see, those potential investors are exactly in the building just behind me. I don't know if you can see, but we do have the Honourable Minister of Trade and Investment, Mr. Adeniyi Adebayo, here. He was speaking to a few people, and it's very open, I would say. People are very happy to speak to people, and it seems like a lot of deals will be done today.
Now, are there specific sector or industry focus for the delegates? What are their concerns about doing business in Nigeria?
Well, there were several concerns, really. I think a lot of people were very honest. Some of the top-ranking issues were the cost of doing business. Everyone was speaking about the roads, infrastructure being a real issue, that you may get there, and there may be certain parts of Nigeria that you want to go to. They can't get there. It's a little bit too dangerous. They also spoke as well about policy and the fact that policy can change from month to month. You get to Nigeria, you think you know what's happening, and then all of a sudden it changes. They also spoke as well about access to capital, that capital can be a huge issue. Trying to change your dollars to naira and your naira to pounds is a big problem. But having said that, they did highlight some of the good reasons why people should be coming to Nigeria, which of course include the fact that we have got capital of people. There are so many people, so many opportunities here. In Britain, I think, are really realizing that it's time to get a piece of that. They've seen that America have been doing that, China have been doing that. Just a couple of months ago, we had that big summit in Sochi. So I think Britain are now realizing that it's time to put their foot on the accelerator.
So how much of the ongoing UK politics, US-China trade war, and of course the sluggish global economic growth sentiments are being discussed as they relate to, frontier economies like Nigeria?
I think they were very careful. Of course, you've got the UK and Nigeria. They were the ones who were co-hosting the event with the Lord Mayor, and we are in election season, so civil servants are very careful about what they're saying politically. So US-China not really spoke about, but what I think a lot of people are talking about at the moment, especially for Nigerian African businesses, is climate change and clean energy, and the fact that, going forward, especially for big businesses, it's not something that you can avoid. So climate change seemed to be the big global talking point, the buzzword of the ceremony. And of course, the fact that they will be having their first inaugural UK-Africa summit. Only 20 African heads of states are going to be attending. And of course, Nigeria are going to be one of the key figures. So I can summarize by saying that, this small showcase, this intimate showcase was, just to set the agenda for what's going to be happening in January, and letting Nigerian businesses know that they can have a significant part to play in any future UK investments into Africa.
All right, Juliana, we look forward to getting more update from you on our news bulletin.
Thank you.
In Asia, stocks were mixed today amid reports of a potentially delay in the signing of a U.S.-China trade deal. Mainland Chinese stocks edged higher on the day, with the Shenzhen Composite gaining 0.64% to approximately 1,651 points, and the Shanghai Composite was largely flat at about 2,978 points. Hong Kong's Hang Seng Index slipped 0.18%. In Japan, the Nikkei 225 closed 0.11%, while the Topix Index added 0.22%. South Korea's Kospi ended its trading day largely flat at 2,144 points. In Australia, the S&P ASX 200 closed 1% higher. And the U.S. stock index futures turned sharply higher in the morning after China said the world's two largest economies had agreed to remove existing trade tariffs. At around 4 a.m. Eastern Time, Dow futures rose 135 points, indicating a positive open of more than 119 points. Futures on the S&P and Nasdaq were both higher. And it comes after reports that a meeting between President Donald Trump and Chinese President Xi Jinping could be postponed until December, delaying a chance for the two leaders to sign an interim trade deal. On the data front, the latest weekly jobless claims will be released at around 8:30 a.m. Eastern Time, with consumer credit figures for September due to be published later in the session. And away from the equities market here, back on the African continent, Uganda will begin rehabilitating its century-old railway network this month to boost bulk cargo transportation after it failed to secure $2.2 billion in hoped for Chinese fund for a new standard gauge line. The rehabilitation will be executed in phases over several years and costs at least 241 million euros.
The European Union has given a grant of 21.5 million euros to Uganda, and the Railway Corporation is talking to international development lenders for the rest. Former colonial power Britain built the meter gauge 1,266-kilometer network a century ago, mainly to move copper and other commodities. But the network fell into disrepair during years of political upheaval and economic instability in the post-independence period. Parts were vandalized or stolen.
Due to lack of maintenance over the years, most of the network is now in disuse. So currently the main active line is Kampala-Malaba and the short distance from Kampala to Port Bell. We shall also replace some areas which have been either removed by vandals or are badly worn. The project cost is about 45 million euros, with 40 million going into construction and the balance going into compensation and other social impact mitigation.
Bulk cargo transporters have been eager for cheaper transport and were disappointed when China did not offer funding for the Ugandan section of the Standard Gauge Railway Regional Railway Project. Bulk cargo transporters have been eager for cheaper transport and were disappointed when China did not offer funding for the Ugandan section of the Standard Gauge Railway, the Regional Railway Project.
China is not giving us charity. China was going to lend us money and is lending us money, I would say. The money we were negotiating with, we are still negotiating with the China Exim Bank. Yes. Now, Exim Bank is a bank. Like every bank, they are careful to make sure that they lend money where it will be paid. So they have not changed their mind. They are only working with us to rework the numbers.
The project was originally designed to connect Kenya's Indian Ocean seaport of Mombasa to the vast hinterland, including Uganda, South Sudan, Rwanda, and Burundi. Uganda discovered 6 billion barrels worth of crude oil more than 12 years ago in the West, but disagreements between the government and oil firms over tax and development strategy have repeatedly delayed production.
By 2024, we'll have our first oil. Now, if this oil had come on board, the performance of our economy would have probably shot through the roof. And it is this economy that we were targeting to build this infrastructure to handle the increased imports and exports that would go with the growing economy.
Now China is examining whether repayments could be adjusted, cost lowered, or the implementation period pushed back.
And after the break, we'll look at the latest development in the global shea butter market on our commodities market update. Do stay with us.